Is there still time to be buying SoFi Technology stock? In this video, we will be trying to find out exactly that. So for those of you that don't know what SoFi Technologies are, I'm going to give you a brief overview. SoFi Technologies is a company that provides a range of financial products and services, such as banking services, lending services, investment options, insurance products, financial planning, and membership perks. SoFi has several key developments as of recently, one being a new private market fund. SoFi has announced a partnership with Templum to provide access to 3 private market funds. This move expands their offerings for retail investors, aligning with SoFi's mission to democratize financial opportunities. On December 6th, a large block trade of $19.7 million worth of shares were priced at $16.10 each. This type of trade, typically conducted by institutions, reflects a significant interest in the stock, but can also indicate strategic positioning for large stakeholders. Zacks Investment Management disclosed a $3.77 million investment in SoFi during the third quarter. So it is very clear to see that a lot of these large investment funds are hedging their bets with SoFi and putting their money into this company. With it still being a very low cap stock, this could have potential for being a big breakout in 2025. SoFi's membership base and sales continue to grow rapidly, driven by its diverse financial products ranging from student loan refinancing to digital banking services. This positions SoFi as a notable fintech competitor. So with that being said, let's put their financial data into my system to see whether or not this is a current buy or sell going into 2025. So I have obviously done videos on this stock before, and if you have seen them, you will have seen the majority of this. However, bear with me, there is some new things to go through here, such as Graham's formula. But looking at the liquidity ratio here, we can see that we are relatively close to the $1 mark. So that means that for every dollar of debt we owe, or they owe, sorry, they have $1 of liquid cash to pay this back in. They are almost at the $1 mark. However, trend lines are actually expecting this to decrease. So that will be interesting to watch in Q4. I do disagree with these trend lines. Looking at the retention rate, we can see last quarter was a ridiculous 64.8% retention. And the first quarter on this showing is at minus 49.6. So we are now in profit at SoFi. I keep saying that like I work for them. I don't work for them, by the way. I've got nothing to do with the company. But yeah, it's looking relatively positive. It'll be interesting to see what they can provide in Q4. Ideally, we want to see this retention rate at least 10, but I'm not entirely sure if they will do that, as it is quite a volatile retention for this company. And now we move on to free cash flow, in which they massively lack, with them currently being at minus $1 million worth of free cash flow. SoFi's free cash flow could be likely due to their business model and current state of growth. This could be due to a few factors, including things such as high operating costs, low margins in early stages, which is more likely in SoFi's case, or capital expenditures, where SoFi might have capital expenditures such as building its own banking infrastructure, where the acquisition of Golden Pacific Bank to secure a banking charter would have reduced the free cash flow for SoFi, and many of SoFi's services like no banking fees and commission-free investing generate little revenue initially. However, this will obviously decrease free cash flow short term. It will be interesting to see where they do take free cash flow in. So we're now going to have a look at SoFi's exponential chart on a 365 basis. We can see that we are currently on target with the volume down here. However, when we look up to the price, we are well above. That could either be extremely bullish or it could cause a massive correction. We will find out later on in this video. Despite this, on the 91-day exponential chart, we are actually on target to keep increasing, so it will be interesting to see where this stock does go in the next few quarters or even the next year. Some of the figures for this company being a massive PE ratio of 92.12, a 52-week high of $16.61 and a low of 601, sorry, this being a difference of $10.60, and we are currently at a price of $16.25. They also have a beta rate of 1.78, which means that they perform on a volatility scale of the Nasdaq 1.78 times. And on the right here, we can see that the company was founded in 2021, indicating that this is still a very, very new company and they have plenty of time to generate their free cash flow. As of recording this, the volume is below the average. So what does this tell me on a Graham's formula, on a buy, sell, hold? So on the left here, we can see Graham's original formula, which is saying it has an intrinsic value of $28.53 per share, and we are currently at a share price of 16.25. With a margin of safety of 75%, that's saying an acceptable buy price is $21.39, so it is actually indicating a buy, which is incredibly bullish. However, when we move over to the right, we can see a more bearish revised chart. This essentially removes the PE growth down from 8.5 to 7, and the 2G becomes a 1G. This gives the stock an intrinsic value of $14.60, with a margin of safety of 75%. Again, we can see an acceptable buy price of $10.95. So indicated on the right, this is actually saying that it is a sell. So going in between the two, it is probably a hold, but we're not going to just base off of this. We're now going to look at another formula. So now looking at Peter Lynch's formula, this will show us if the stock is overvalued by looking at the future growth, the dividend yield, and the PE ratio. Looking at this, we can see that this stock is just over fairly valued, and it is starting to get into the undervalued territory, with the result being 1.156. We are just above the fairly valued cap. So with that being said, there could potentially still be time to buy into the stock, especially seeing this future EPS growth of 106%. And that is just what the analysts are estimating. Often the analysts under predict these things, and it's actually way higher. So it will be interesting to watch. I don't currently hold any SoFi stock, but I might potentially be buying into it. So what do the actual analysts think about this stock? Where will this head in the next year according to them? Looking at a 90-day projection, they project a high of $25 and a low of around $7. My personal opinion is it will go around. I do think we're going to see a lot of volatility around this point for sure, but I do think overall it is going to be a stable investment, mostly due to the system saying it is a buy, and it is currently just above being fairly valued, and that is quite a bearish system normally. So in 2025, they are projecting a target price of around 10, let's say that's $11 there. And on a current buy, hold, sell scale, they're saying hold, which I do currently agree with looking at the system. But I do think that this should be a bit higher. I think it will be around the $14 mark. And that is at the very least. I do think this company is going to have a very good 2025. So if you're trying to hold, if you're trying to time the market, maybe it's time to hold or just not buy in if you haven't got stock at the moment. I do think we're going to see a bit of volatility around this next month, but I think overall, if you're trying to hold this stock long term, you're going to have no issues. When we compare the growth to its peers, SoFi is massively on top, so there is no competition to worry about here. So is it a good time to buy in currently? Is it a good time to time the market? According to the Sharpe and Sortino ratio, it definitely is. We can see a Sharpe and Sortino rate of 46.9, which is actually the highest I've ever seen on a Sharpe and Sortino ratio. That assesses the current risk to reward if you were to hold it mid to short term-ish. Despite this, when we look on the chart, looking at the trend lines from a 200 to 7-day range, we can see the 200-day range down here. We are well above this, of course, and the 7-day is all the way on it, which it typically is. So this is a daily chart. I would probably personally say there could be, looking at this, a correction, as this 200-day moving average is so low right now. But when I say a correction, I think it might just be a stunt in growth. I think we might see a bit of sideways action for a bit. You can't actually see what I've just drawn because it goes off the screen, but I think we're going to see a bit of sideways action and a bit of volatility in the next month. However, definitely hold this stock. It's not time to be selling at all. If anything, it might be time to be buying. Looking at the Sharpe and Sortino ratio, I just think this stock has great potential going into 2025. And if you hold it beyond 2025, I think this stock will reap rewards up until 2027. So that is my opinion on this stock. Again, I'm not a financial advisor. This is not financial advice. This is just my own personal opinion, and my actual opinion has changed on this stock drastically the more and more I get to know and learn about this stock. So that is it for this video. Please do leave a like, subscribe and comment, and I will see you for the next video.